Hey, ladies and gentlemen, Jerome Maldonado. I wanted to give you guys a housing update on the month of May. And most of the information I'm giving you guys today is within the last 7 days. So for those of you guys who have watched some of our housing updates in prior weeks, this kind of trumps it. There's some great information that just came out. We've been watching the market steadily. So for those of you guys who don't know, I've been buying land, building houses, developing commercial real estate for well over 28 years. We went into retail in the early 2000s, and we evolved from retail after the recession into multifamily real estate. So housing has been a big thing for us, especially affordable and cost-effective multifamily housing has been a big press for us since 2016. But single family, upper median homes have been a big profitable margin in our business for many, many years. And so people are sitting back. If you're an investor, if you're in construction, if you're sitting back as a trade professional or just somebody interested in investing in real estate, you're sitting back, and more so now than ever, you're aware of what's happening between the tug of war between inflation, mortgage rates, and where we need to be nationally to keep all of our economics intact, right, with the economic slowdown. We don't want to go in, rise interest rates, get inflation down, and then our whole economy falls apart. So there's this tug of war going on between our economic growth and being able to stabilize inflation. And so when you're trying to stabilize inflation, you're trying to cut back the economy, and you land up crashing it, we roll into a recession. So a lot of economists, including the people from the central banking industry, professionals and CEOs from the National Association of Realtors, National Association of Home Builders, there's a lot of press release that's come out this week. And why? Well, for those of you guys who didn't know and didn't realize, mortgage rates dropped this week. And it's the first time here in 2022 that we're actually seeing some relief. And a lot of economists right now are sitting back going, interest rates rising are done for 2022. Now, these are just economic predictions. We don't know this, but I know that Kyle Mitchell and I, my business partner on all my multifamily builds in Arizona and also in Dallas, we sat down, we were driving up to Tucson this week, and we were just kind of talking over our professional outlook on what we think interest rates are, what's happening with interest rates, what's happening with inflation and building costs, and where we need to be conservatively when we're underwriting our new builds. We have over $100 million in new development under construction right now, and one of the big things is understanding where we're going to be, not during construction, but at the end at stabilization. And so for those of you guys who are looking at this from a home buyer's perspective and a home building perspective going, Jerome, I don't really care about the big, large acquisitions that you guys are doing. All I really care about is how does this affect me with my home, my mortgage, or I want to buy land, build house, and make $100,000 doing it. And so hence, how does this affect you? Well, just some updates real quick. 30-year fixed mortgages have actually stabilized. The banking parameters that have been affected the most have been the HELOCs and the adjustable rate mortgage market. That's where people are still getting hit a little bit harder and mortgage rates are still a little bit higher. Now, understand that in spite of that, they still are looking at very attractive rates compared to historical rates in 10 years ago, where when you could go in, get any type of commercial loan at anything less than 6%, you were doing extremely well. If you went in and got a single family home mortgage at something less than 6%, you were doing extremely well. Well, in current days, when you go back and you look 2 years ago, when we look pre-pandemic and you look into the pandemic, we were seeing rates as low as 2.5% for 30-year fixed mortgage rates. And now this year, we saw them grow as high as 5.45%. Well, good news from that. Just in the last week, 30-year fixed jumbo mortgage rates went from 5.03% down to 4.86%. The 15-year fixed mortgage rate went from 4.62% down to 4.4%. And the 5/6 adjustable went down from 4.97% down to 4.85%. So ladies and gentlemen, we just saw mortgage rates decrease. Why is that? You know, one thing that Kyle and I were talking about when we were driving down to Tucson is we said, you know, we're just watching the market and we're looking at how the market's being affected and we're looking at how economic inflation is being affected. And I noticed that lumber went down this week. I know that a lot of raw crude materials, petroleum-based products, stuff that's produced with crude oil, like PVC, irrigation parts, plumbing parts, all of that stuff dropped a little bit in price this week. And was it just enough for the feds to talk about? raising interest rates to get everybody in a frenzy and buyers slowing down and be able to stabilize our economics, or do we need to continue doing more? Well, I'll tell you, if we just go in and we tease the American people for a short time, and that's all we do, I have a feeling that we're in a world of hurt and we're going to continue seeing inflation. So what I think is that I think Feds are still going to press this. I do believe that the tariffs on Canada and import needs to be lifted so that we can get lumber being brought in from up north at a lower price and be able to open up more distribution of lumber so that material costs come down. Lumber costs are still high in spite of the 10% drop that we saw this month and actually this last week. And so if we can continue working with the Federal Reserve and they can stabilize interest rates but press them just a little bit with some minor fluctuations, I believe that inflation will slowly start to stabilize, and we'll start seeing more buyers in the market again. People retract. I'll tell you, I've seen this many times. In the late 90s, when I first opened up my business, it was a huge topic of conversation that there was an economic recession at that time. And so when we were negotiating with home buyers and people that were coming into the market to spend money on projects, people were very aware and very keen of the money they spent. So it was a negotiating effort, which hence made our sales abilities really strong. As we moved into 2008, we got wasteful in 2006 and 7, just like we did in the last 2 years, ladies and gentlemen. I don't care how you see it. As you go through the pandemic and we look at how American people were living, we were living extremely wasteful. People were going out they're buying expensive cars, overpaying for cars, housing, for food, for everything, all commodities, everything out there, people are overpaying. Vacationing, but they weren't saving anything, they're spending everything. You pump $9 trillion into the economy in 2 years, and only $2 trillion of that is still left out there. And so, ladies and gentlemen, we're a very wasteful society. So when times like this happen, it gets people more conservative. They go on strike and they pick it and say, I'm not willing to pay those prices. They were willing to pay them at the old price marks, but as wasteful as we are as Americans, we're not completely stupid either, right? And so I always tell people there's good debt and there's bad debt. And one of the bad things is that when people are buying items that don't hold any monetary value financially, it's bad debt because they're buying things that don't make them money. Everything that we do are assets that make us money. And in a market like this, the market like we're seeing today, when people don't have assets and they're spending money, they sit back and they retract, because you have to understand that over 85% of the population doesn't own assets other than their home. And a lot of times their home itself is a liability, especially when they're overpaying. And so when interest rates rise and when people are overpaying for everything that they have in their life, from housing, from automobiles, from food, from natural resources like crude oil, oil at the pump, gas at the pump that comes from crude oil. Ladies and gentlemen, refined fuels, all that stuff is high. People start to retract. They go on strike and say, I'm not paying this anymore. I'm not going to pay these inflated prices. So hence, the housing market drops, which brings a big concern to our national economics, being that housing is the #1 provider of economic growth in any country. And so when we look at the National Association of Home Builders, and they tell us that the average median home is $391,000 as of last week, $391,000, up from $185,000 just less than 3 years ago, ladies and gentlemen. So when we see that type of inflation on single-family homes, it starts pushing buyers out of the housing market. And when we're buying land and building houses, we need as many people in the housing market as humanly possible. So look, the Feds are coming in and they're telling us that they're selling off bonds to retract. They're selling off bonds to be able to help stimulate the economy. And the reality, when the Feds go off and they sell off bonds, it's to retract money. So in spite of people going out and us saying, hey, we have a national debt, we pumped $9 trillion into the economy, we as U.S. Americans spent 7 of the 9 trillion that was pumped out there, and 2 trillion is still out there. What happens to the rest of that? Well, some of it goes in as debt. But if you understand the way the Federal Reserve works, ladies and gentlemen, the Feds are selling people on the fact that they're selling off bonds to help out the market. The reason the Feds sell off bonds is because when they sell off those bonds and then those bonds mature, what ends up happening at maturity is they don't pump that money back into the economy. They retract it. They retract that money. So if they sell those bonds off, the bonds mature and the bonds are paid off, they don't pump that money back into the economy. They retract that money and they hold on to that money. And so we as Americans believe that there's $9 trillion in the market out there that doesn't truly exist because the feds have retracted maybe 2 trillion, 3 trillion of that money, and it never gets pumped back into the economy. So what was 9 trillion might only be $6 trillion, and hence they're selling us on the fact that they're selling off these bonds to stabilize our economy. But it's all in a day's work with the federal banking system and our central banking system, the Federal Reserve, and the way money is circulated economically. Now, for some of you guys, I just went over your head. Just understand that there's an exact parallel between the central banking systems in our U.S. economy, and it's not for the betterment of all of us, you and I, it's for the betterment of their business model as the central banks, because the banks are a business. So if we look at the banks as a business, and if people aren't buying and mortgages aren't getting taken out, it affects their buying power, it affects their business model, and it affects their revenue and cash flow. So the last thing that the Federal Reserve wants to do is completely halt and slow down the housing market because it only affects them. You realize that the Federal Reserve, for every dollar they print, they can lend on that 9 more times. So they can lend on that same dollar 10 times. And so if the Federal Reserve stops lending money, the central banks don't make any capital. So understand that it's in their benefit, not ours as US Americans, it's in their benefit for their business model to continue giving end buyers like you and I mortgages on single-family residences. So even if we see a little market contraction over the long haul, what I'm telling you guys is that we're going to be okay. Feds, I believe, are going to start slowing down interest rate rises over 2022. I think we'll see some fluctuation, and I think we kind of need to, because going back to what I talked about early part of this video, that if the Feds just throw up their hands and say, okay, we're done, then people go back to their same wasteful spending. And again, inflation is real and it continues. But a few things that if Biden and the White House are listening to this video, open up the XL Keystone Pipeline. Let's get our own commodities being produced right here in the United States. Let's get our own crude oils being produced over here, our own refined fuel being produced right here in the United States. We're a very affluent and wealthy nation, ladies and gentlemen. Let's take advantage of growing our own organic foods right here on our own farmland. Bill Gates is the largest farmland owner in America. I was reading some articles this last week regarding farmland that were very intriguing. But ladies and gentlemen, the National Association of Realtors is telling us that that buyers will be re-entering the market. Interest rates are starting to stabilize. And so, ladies and gentlemen, if you're in the market, you want to refinance or you want to enter this market, this summer, 2022, is a great time to do it. If you want to buy land, build houses, come on in, join the movement. We have a housing crisis that still isn't fulfilled, and we still have a housing shortage that's real. Click below, join us inside, and I look forward to seeing you next time.